Okay, we thought this might be coming, but now it's official. If you pay flood insurance on your home, get ready for some sticker shock. Changes to the way FEMA calculates premiums are set to take effect this Friday, and homeowners all across the Tampa Bay region could see significant rate hikes. Fox 13's Catherine Hawley is live in Tampa. She's been looking into this. And Catherine, this is really the first major overhaul of this FEMA program since the 1970s.
Yeah, Chris, these changes have been a long time coming, and the new rules are designed to assess each property's risk individually rather than lumping homes into rates based on flood zones. Honestly, it sounds great, but Florida lawmakers say it could cause a potential crisis. The vast majority of Floridians have their flood insurance policies through FEMA's National Flood Insurance Program, and big changes are about to be rolled out.
We're seeing probably 90 to 95% of homes within the Tampa Bay region that are in flood zones see rate increases as a result of this.
Right now, NFIP premiums are calculated based on flood zones and elevation. The new system is called Risk Rating 2.0, and the goal is for rates to reflect the actual risk of each property, taking into account multiple factors like proximity to water and drainage.
For those homeowners, it's definitely something to be proactive on in terms of understanding the change and how it affects you, because unfortunately, we were only given a 30-day window of being able to communicate this change.
Come Friday, anyone purchasing a new NFIP policy will be charged with the new formula, while anyone with an existing policy will start seeing changes on April 1st, and there will be some hefty hikes.
And we're seeing some of those go from $600 to $11,000 per year within the NFIP program.
Thankfully, those increases are capped at 18% a year, so any huge jumps will be phased in. Still, Whole House says there are concerns. FEMA has not released exactly how Risk Rating 2.0 is calculated or provided all the factors the formula uses.
So from what we can tell, the biggest rating factors are value of home. So we've seen examples where you move it from basically different values, and as the value goes up, the premium increases pretty significantly at the same time.
Meaning a homeowner who spent money elevating their home could pay the same rates as a non-elevated home, since it would be more expensive to rebuild, even though the risk of damage is lower.
Now it basically just wiped out those rate credits to where somebody is not as financially incentivized to build up and become storm resilient.
And over the last 2 weeks, local members of Congress have taken action to try and delay the rollout of Risk Rating 2.0 because of the burden homeowners could face. Letters were sent to House leadership and to FEMA urging action. And just yesterday, Senator Marco Rubio introduced a bill aimed at pushing Risk Rating 2.0 back an entire year. So, Chris, we'll have to wait and see if any of that is able to take effect before this rollout is set to start this Friday.
Yeah, you'd think a lot of homeowners are hoping that bill that Rubio has introduced would be implemented, because I've got to imagine that a lot of them may not have, as you said, sticker shock. They may not have budgeted for this big expense that's coming their way. All right, Catherine Hawley looking into it for us tonight. Thanks, Catherine.